Rates were cut 3 times last year. It was largely expected that the Fed would hold rates steady today. Why do you think, and when do you think we'll see movement in the Fed again, up or down with those rates?
Good questions. You know, the Fed's caught between a rock and a hard place right now. If they cut rates, it's going to cause inflation to go back up. But if they, hike rates and something breaks, we could see some housing, the consumer, banks have some real challenges. So, these guys froze. And I think that we're looking at a higher for longer environment, and it just got longer. So, when are they going to be cutting rates ultimately? I think that they're looking for potential challenges in the economy. They were very specific in saying that, that there was some uncertainty with their outlook. The Fed has got some problems, though, in how they're reviewing this. They're ultimately looking in the rearview mirror instead of looking in the windshield of where things are going. And so we're in a structural shift right now, Alicia. And, this is important to understand because, we have an AI-driven economy. It's finding more efficiency. That is driving, prices down. Stock markets are going back up. But ultimately, we are seeing some job cuts. And, if they look at, job cuts being an indicator of whether things are going to go up or down, they may make some moves. But ultimately, I think that our economy is sort of repricing, restructuring, and reforming to a different world. And so, there's a lot that could be done. There's a lot that could be said. But ultimately, I think the Fed kind of has, this waiting game on their hands because you're damned if you do, you're damned if you don't. And we got to, navigate this thing going forward. But, if we really look at inflation rates right now, Trueflation.com has us at 115, which is amazing and not even close to the 2%. It's way below it. The challenge is that everyday consumers still feel that 28%, though, that everything has increased since the year 2020. So higher for longer is likely what we're going to see.
Okay, so President Trump, he's expected to announce his next Fed chair soon. And he says when that person takes over, interest rates will fall. Do you have any predictions?
Yeah, I mean, hey, this is what he wants to see. This is very likely. Based upon those timeframes, we'll get a little bit further out into the year. And we need to see meaningful places where interest rates fall. I mean, if you can do something with the 30-year mortgage or the 50-year mortgage now, that would be amazing. The challenge is, though, is that if everyday consumers have a harder time, making ends meet because their credit card debt got too high or maybe they lost a job, then ultimately they're going to try to sell. Anyway, we've got some issues here. So I'd love to see the rates come down. I think it means a lot for real people. It's just that we have a disconnect between seeing the S&P 500 going up as this is the economy versus what the real economy is, which is real families and how much can they actually afford. So there's risk right now that's difficult to price in, and obviously we're seeing inflation in different places like gold and silver. I mean, if it takes more individual dollars to buy an ounce of gold or silver, that's inflationary. But we're seeing a weaker dollar today, and that does give us the ability to manufacture more at home. That gives us the ability to trade with people all over the world. And I think President Trump's point on that here just a couple of days ago is that he's actually happy with where the dollar is. So it's a really important time to be paying attention and just not doing the buy and hold, park and pray, hope everything be okay thing.
Yeah. All right. The ship is turning. David Stryzewski, CEO of OANN Planning Group. Thanks for being here today, as always. Appreciate it.
Pleasure's mine.